So welcome everyone to our webinar about stablecoins and euro on blockchain. We have different topics prepared today. Before diving into the details, we want to showcase a few examples what we see currently happening in Europe in terms of stablecoins on the blockchain. And for that, we have also a partner with us today, Luis, which will also introduce himself shortly. And the topics you would like to touch today are stablecoins in Europe and worldwide, what's happening right now in the industry, in the financial industry, speaking a bit about custody and the infrastructure which is needed in order to use stablecoins in a safe and regulated manner, before we dive into the digital euro itself and what it also means in terms of sovereignty for Europe and for also for players using such innovative solutions. And then we're coming to the integration on the banking side. How could that look like before we wrap it up with a future outlook, what we expect to happen in the next couple of years in terms of stablecoins, but also digital assets generally. And then we touch on the questions from the audience here. So I'm Martin Kreitmair. I'm one of the co-founders and CEO at Tangany. We are a regulated crypto custodian based in Germany, and we provide only B2B services to other institutions, banks, asset managers, brokers, fintechs. And that is what we do already for a couple of years now, since 2018, meaning we have seen everything in the industry, mostly in Germany for the last couple of years. And since MiCAR, and since we have the harmonization of regulation in the EU, we also operate across Europe, which gives us a very good insight what's happening in different jurisdictions in Europe on the banking side, with asset managers, other players as well. And we can also provide that kind of feedback and information, that knowledge today. And with me today is Luis, which I'm very happy to have you here with us today. And maybe, Luis, you also take the opportunity to introduce yourself briefly.
Yeah, sure. So also welcome from AllUnity's side. So thank you, Martin and Tangany, for hosting the session. So I'm Luis, Chief of Staff at AllUnity. So mainly focusing on the strategic topics and especially on the payment topic. And what we do with AllUnity is, we're building more or less a European payment infrastructure, starting with a euro stablecoin. So bringing the euro on chain. The reason why we do this is because in the current setup, especially euro is not accessible on a global scale, and that's what we want to change. And that's also the unique setup of blockchain, that you can settle stable coins in different currencies globally, instant and 24/7. And that's what we're focusing on, to building the bridge in and out of Europe, so that you can pay globally with euro. And that's what we do, and where we connect on a global scale, for example, also with SAP. So bringing really real world use cases in the euro stablecoin world.
Perfect. If I'm not mistaken, you also have been one of the first regulated stablecoins in Germany, right?
Yes, exactly. Yeah. So we are fully licensed under BaFin. We have an e-money license. So we are they are fully compliant, and you can use us within whole Europe and beyond. Yeah.
Okay, let's dive into the topics today, starting a bit on the general view on stablecoins in comparison to the traditional finance market. So what we see today, and stablecoins might be regulated now for 1 year under MiCAR, that does not mean there were no stablecoins before that. So right now, today, we have a global market of more than 250 billion euros for stablecoins. So we are speaking already about a very significant market here, where a lot of value is already inserted into. And the major use case for what stablecoins have been used in the past are trading of crypto assets. So I remember when I got into crypto in more like 10 years ago, back then, if you wanted to trade cryptocurrencies, you always had to trade it against Bitcoin. So if you wanted to go into Ethereum or Solana or any other assets, you had to do it against Bitcoin, which was not very convenient. And after a couple of years, I think 5 years ago, the first stablecoins emerged and were the primary trading asset or trading pair against Bitcoin, against other cryptocurrencies. And today, more than 80% of all trading happens against stablecoins. So not against the euro or the dollar itself, but against a stablecoin like USDC or USDT. That's also reflected when we see and look at stablecoins which are now regulated and how they're going to be used for other use cases as well, for tokenization, for example, or payments, cross-border payments, meaning what's really important in the future will be the wallet itself. So the digital wallet, where is the stablecoin, other digital assets are stored, and that is more like the new banking account for treasury, for other use cases, which makes it very critical and very sensitive as well to have a solution in place as an institution eventually to host digital assets where stablecoins are a part of that one. And maybe to also look on where Europe stands there, and let me compare that one with the euro to the dollar today. And there are three major topics where those can be compared. The first one are international payments. The share of the dollar globally is roughly 50% of all payments globally are done in dollar. But also the euro is one of the major players here. Like every fourth payment globally is an euro payment, making those two currencies very dominant globally. And the same goes for global reserves, where 60% are reserves in dollar, and the euro has a market share of more than 20%. It's increasing in the recent times. And the same goes for international loans, where again the dollar covers 2/3, where the euro covers nearly 30%. So the fair market share of the euro globally is like 1/4 roughly. And that is not what we see today in the stablecoin market, which is, in my opinion, an issue for the Europeans at least, as 99.9% of all stablecoins are denominated in dollar. So from the 250 billion a year of the total market cap, it's mostly just the dollar. And I think it's very important also for us as Europeans here to grab the opportunity to use euro stablecoins here in Europe, also to reflect our goal to create a higher sovereignty here in Europe when it comes to payment infrastructure. And the stablecoin is a huge opportunity here. And I think it's now up to us in the industry, the institutions, the players like AllUnity, Tangany, to bring the euro to the market. And there's a huge opportunity as well for everyone that grabs that new innovation here. A brief look on the history of stablecoins. I already mentioned it. Stablecoins have been around for a couple of years already. It started 12 years ago with Tether. It was the first stablecoin introduced. It was based on the Bitcoin blockchain back then. Since then, it emerged to other blockchains as well. And it's a stablecoin which is pegged to the dollar, meaning one Tether is always $1 valued. And that one really changed how the crypto industry behaves and how it operates, meaning that it has a huge success and that also created more stable coins over the years. Another one to mention is USDC by Circle and Coinbase, today's largest stablecoin from my knowledge. Also, PayPal introduced another stablecoin 5 years ago, the PYUSD, which is only used within the PayPal ecosystem. And then finally, 2 years ago, the European Commission introduced the MiCAR regulation. It was originally designed and purposed to regulate the stablecoin by Facebook, which never materialized, but was announced 5 years ago or 6 years ago by Mark Zuckerberg. And then MiCAR was the European answer to that one. And even though, despite Facebook never launched the stablecoin, We have MiCAR now here, which also regulates cryptocurrencies on an EU level, and also stablecoins. In my opinion, it's a good regulation. It introduces a huge market. We have the largest global market for digital assets now, with more than 500 or nearly 500 million potential customers. So I think MiCAR is a good step forward for Europe to harmonize and to set the ground. And then last year, we have seen the first regulated MiCAR stablecoins, namely from AllUnity, the euro being now fully regulated under the framework, which is not a milestone to have a regulated one, which is now a stablecoin that can also be used by institutions, by banks, as they know there's regulation behind it and they know how to operate with those stablecoins.
Yeah, and yeah, to dive deeper, I would say in the European setup. So what I want to add on this one is, in the end, what we have the unique setup within Europe is that not only stable coins are fully regulated, so you can use it for payments, but also all kind of assets that getting tokenized, so getting on the blockchain, are also regulated. So you have the unique setup that you have the cash leg and the asset leg on chain. And that's also the first point I want to highlight here, is that Euro stable coins and also other, for example, US dollar or I don't know, Aussie dollar, or you name it. This is not crypto. This is really like a euro or like another currency on the blockchain, and you can use it for payments. So a stablecoin is always one-on-one backed. So you can use it as in the old world and the fiat world, to make to pay your invoices, to make your treasury transfers, etc. This is the setup. So in the end, what we are, or like what stablecoins are, is the lifeblood, which can be used by all kind of financial institutions, corporates, and everybody who has to pay something. So that's important, that we don't replace banks, but rather we upgrade the infrastructure so that you can send, for example, euro stablecoins around the world. Because what's happening currently is that, yes, you can use the euro within the SEPA ecosystem, so you can send perfectly euros around Europe, but outside of Europe, the euro is not accessible. Or yes, there is SWIFT, but SWIFT is mainly happening on US dollar, but you are not able to pay invoices, for example, in Brazil in euro. And that's what now happening on the blockchain, is that you can send a euro for making a payment from Europe to Brazil 24/7 instant. So it doesn't matter if the wallet is sitting on the opposite side of your desk, or if the wallet is down in Sao Paulo. So it's the same time, and that's the efficiency of this whole setup. And what's on top of that is that there's also no, I would say, crypto setup which is really complicated, but currently players like SAP and others are building an infrastructure that can be used by, like as you using currently your bank account. So you have the same approval flows and controls as today. In my opinion, even more secure, because it's all in the code. And on top of that is that, yes, a wallet is more or less a modern version of a bank account. What I mean by that, currently you put the money, what you have on your bank account, and they have it in their core banking infrastructure. And in the future, they're providing wallets for you. So you have then the same amount of money on the blockchain. And this is more or less the efficiency. And that's also on the next slide regarding the digital euro. So what is also important is that euro stablecoins, or in general stablecoins, they are not, I would say, a competitor directly to a digital euro or CBDC, but it's more or less just another opportunity. Because when you look currently into the setup, how money is structured, is that you also have different forms of money. You have e-money, so what PayPal is. You have Giralgeld money, which is used by banks, and then you have like central bank money. And in the future, you have all these forms of money in a tokenized version. And the stablecoin is in Europe regulated as a tokenized e-money, so you can do the same just in the tokenized world. And there are the different use cases yeah, it's the same as in the existing world. So you can use it for cross-border payments, for intra-group treasury setups, for supply chain settlements. So when you receive goods from China or Hong Kong, Singapore, etc., you can make really instant invoice settlement. And on top of that, what the digital euro is also doing is that as euro stablecoin is also helping the European sovereignty, because what we push here is that the euro is really globally accessible and that you can use it, for example, also in Africa to make payments. So it's supporting Europe as a yeah, I would say a setup. And for example, the digital euro, how it's currently contemplated, so the retail stablecoin, the retail digital euro, is that this one can be only used again only within Europe. So it's also not accessible outside of Europe because it's on an infrastructure that is built by the central bank, and it's like not public, so you can't use it on a global scale. So this is more or less the summary that the digital euro is important. There are use cases within Europe, and also when there's happening that the central bank will issue a wholesale stablecoin. But in general, also euro stablecoin is really important for the European sovereignty.
Thank you for the answer. It's very, very interesting. So Europe is not the only region globally touching on stablecoins and embracing stablecoins. Also, the US is more active in the recent years. The Trump administration also introduced the Genius Act to regulate stablecoins in the US, but also the major players there are already active, like JP Morgan using stablecoins for internal settlements between corporate clients, or like seen before, PayPal, which enables customers in the US or even beyond that to use their own stablecoin to do payments, which is cheaper for PayPal and increases the margin for PayPal. And also Visa is using stablecoins already. In that case, the USDC by Circle and Coinbase to settle interbank obligations. So the big players in the US are also embracing stablecoins already. And so it's even more important in that regard that also we Europeans are embracing the opportunity of that innovation and also use stablecoins and manage to maintain the euro as a global payment and currency. And I think we are on good track here in Europe, but there's still a lot of work to do. And maybe a few more words about the tech side of things, especially about Tangany, but also generally speaking. I mean, the stablecoin or stablecoins in general are on blockchain. What does it mean? Blockchain in the end, it's just a database, a decentralized database where many participants can have a copy of the database. It's not stored somewhere centrally, but locally distributed. And that's a huge innovation if you think about nobody has a hand or a control of the blockchain. The blockchain itself is neutral. It's open. Everyone can participate, can connect, and plug into the blockchain like Ethereum or Solana or any other blockchain. And everyone who uses the blockchain and works with the blockchain it's equally accessed and approved to the blockchain. There is no one having some benefit or have some influence over the technology itself. And that makes it a very good foundation to create global infrastructure when it comes for digital assets in general and wealth on the blockchain, but also for stablecoins like Luis highlighted, to use the euro stablecoin globally because the blockchain is globally and everyone can plug into that one. And that's the huge benefit and offer the blockchain provides. And now it's really about using the stablecoin, the euro stablecoins in Europe mostly, but then also beyond that potentially. And in order to manage that one, what's always needed is a wallet. A wallet can be operated by everyone themselves by using a player like Tangany, a regulated custodian. Can also be an unregulated wallet even by wallets operated and maintained by the users and the customer, which is like a cash account or paying in cash, an unregulated wallet. But what we see usually is most institutions are using an own solution or try to build up their own solution by using available technology on the market, or by using a regulated custodian as a sub-custodian like Tangany. And there are different topics that need to be taken care of, like regulatory status, the license in Europe. There are also national licenses or laws that need to be considered, like in Germany, the German Banking Act, which handles qualified custodyship. But also security is a key topic, of course, the key management, so the access to the wallets. How do I maintain access to the wallet? By the same time, to ensure that nobody else has access to the wallet where the stablecoins is stored. Asset segregation is a huge topic, but also audits, insurance coverage, which is already everything is already there in the industry, but still the industry of custody and stablecoins is now 10 years old, so it's a very young industry, and we already have everything in place, but it needs to mature more in the next years. And for that, institutions need also to embrace the potential here. Other topics are integration into core banking system via APIs, front ends. So everything is already there. We at Tangany, we have done now more than 15 integrations with different banks, seen a lot of different core banking systems, and it might looks like a huge challenge to integrate and to plug in a new technology like blockchain and stablecoins into core banking systems. But we have seen it in the past. We have managed it every single time. It's doable. The solutions are there at Tangany with other players as well. So the tech itself, it's ready. It can be used. And also the governance. It's similar to traditional governance and institutions when it comes to approval processes, to new product processes, to incident response, to BCM processes. The transparency is there. So it's very similar what banks usually have for traditional euros, for securities. It can be replicated for stablecoins and digital assets also in general by using players like Tangany or others. To give you an example how such a setup could look like, very, very high level, there is the customer, which is attached to the bank. The bank itself can be in custodian themselves or using a provider like Tangany for also providing the custody services directly to the user. On the dotted lines here, for example, Tangany would end up in a relationship to the customer. If the bank is the custodian themselves, then there's no relationship between Tangany or any other player and the customer. Then the bank can outsource the operation of custody to Tangany, for example, or other regulated custodians in a sub-custody setup. And we have the access to the blockchain, and with that we have the access to the stablecoins like the euro from AllUnity. And then there are other players like on-ramp for Unity's stablecoin. It would be AllUnity for the on-ramp, bringing the stablecoin to the blockchain by depositing euros on their account, but also the functionality of trading against cryptocurrencies or investment into tokenized assets like real estate or collectibles or digitalized securities by paying and using stablecoins can also be used. So there's a huge world where stablecoins can be used outside or beyond cross-border payments or just payments. So investment opportunities on the blockchain are the natural business case for stablecoins because everything is then already on chain and can be used by the customers 24/7 for low fees, very transparently. So there are a lot of opportunities for the customers, but also for the bank institutions to generate new revenue streams or to improve existing revenue streams and business cases by adapting to the digital solutions here. So yeah, so much about the technical side of things. Maybe back to you, Luis.
Yes. So yeah, just to summarize what Martin just said, is in the end it's a plug and play game, and most of the time it's already like there is a solution how you can connect because somebody else already did it. And the main, I would say, two ways to access euro stablecoins, but also here important to mention, a token is a token, so it doesn't matter which currencies you want to have. So once you have the wallet infrastructure in place, you can hold all kind of stable coins on your wallet that are in Europe MiCAR compliant, but it doesn't matter which currency it is. So you have already like more or less an FX setup in your own, then on-chain bank account. And the model one is, as Martin already mentioned, that you set up a wallet infrastructure through Tangany, so they are fully licensed custodian and act more or less like a digital bank, because what a custodian does is really just having the funds you have on your wallet and they secure it. And then you have there already integrations to ERP players or SAP or etc. And the nice part about blockchain infrastructure is also here again, it's always the same setup. So it's not as with core banking systems, then treasury systems, etc., where everybody has a different standard. The blockchain is the standard, so you can always plug and play in all kind of on-chain softwares, I would say. So when you want to plug in then in your Stripe backend, it's just like you connecting it. It's probably after 2 seconds connected. And all other big players who are now going into stablecoin infrastructure and payments, it's just a plug and play game. And the second step is then that you can also go via your house bank for sure. So you're seeing maybe in the news that different banks are already building their own custody solution. So this is the second option. Or if there is, or the house bank doesn't offer it, you can also just say, hey, I have here my custodian Tangany, and then I want to integrate it in my banking or online banking system. And that's, I would say, the two options. And on the next slide, I just summarize it again. So it's really not a heavy IT project because in the end, it's either the two options. You open a setup with Tangany, and they can help you there to also connect it to your bank account, for example, to mint and burn stablecoins. And in the end, it's just a tokenized version of your existing treasury system. And for example, there also SAP, they just launched their digital currency hub where you can connect your wallet infrastructure. And in the end, you can use it as you are using your existing treasury setup where you bring your bank account, but now you bring your wallet and you have the same flows also from the accounting perspective. On the next slide, we also just highlighted it more or less in a pragmatic path. So what's happening? So step one is that you can access stable coins for payments is that you start with a licensed custodian, then you see or check where you can connect or with whom you can connect already, like with your existing infrastructure. For example, when you use your treasury and ERP system from SAP, you can directly do it. For example, FIS Integrity, they are also already ready. And also Kyriba, they have a partnership with Fipto. So many of these treasury players already have a stablecoin strategy. And then the next step is for sure to involve your house bank. Either they also have already a stablecoin strategy, or otherwise I think they will be pretty open because they don't want to lose you as a client. And in the final state, what's happening is that you can use euro stablecoins and other stablecoins like you did in the old world in the corporate banking setup. But now the nice part is it's cheaper, faster, and way more efficient.
Yeah, thank you, Luis. So that's more like a wrap up where we stand today and where we're heading to. And today, stablecoins are largely dominated by the US dollar. I think that has to change. I personally believe that Europe has a good chance here now to catch up and to even position the euro as an alternative globally, which is very trustful and reliable as a currency, and is a huge opportunity here in the digital asset segment to be a first mover. And now we have the regulation in place, MiCAR, which is good. It's created the single largest market globally with 450 million customers, where just one license is needed to operate across Europe. And that brings us in a very good position really to now embrace the opportunity here by the industry, by the institutions, by the players like AllUnity, Tangany, and the others to adapt stablecoins into existing infrastructure and business cases and to use the innovation that is presented here today and in the market to really become a core element and component in how we do payments in the future in Europe by using stablecoins, which have a lot of benefits, like Luis highlighted. And the next years to come will be really key here to embrace it. There will also be a digital euro by the ECB in the next coming years. We still determined how it will defined and designed, but there's a lot of ongoing, and also on the politician side, there is the interest and also the ambition to become more independent from foreign payment infrastructure like MasterCard, Visa, and the others. And that one here is really the opportunity. So it's now up to us here, everyone, to adapt and to embrace the opportunity. So much about today. First of all, thank everyone for participation today. If you have any questions, feel free to to post it in the chat or the Q&A segment. Please feel also free to reach out directly to Luis or myself if you have any follow-up questions you would like to discuss bilaterally. And a question that reached us was, where do you see the biggest efficiency gains when moving euro payments onto blockchain rails? I think that one is for you, Luis.
Yeah, okay. So as mentioned, you can send it 24/7. It's just the speed you have in place, which means you're always liquid and you don't have to wait because it's Sunday or Saturday. And you can also receive faster the funds. So when you're waiting for an invoice payment, you can really see or receive it then directly. And this is, I would say, the setup. It's speed and efficiency you have there in place, and also from the transaction fees perspective. So with Swift and others, it's really expensive to send €5, but now it's really like when you want to send €5 down to, for example, Sydney, it doesn't cost you anything from the on-chain settlement, so it's below 1 cent. So it's like you would do a SEPA instant transaction. So either you send €5 or 1 million, it's the same amount for when you just look on the transaction.
Perfect. So yeah, maybe it's a bit off topic, but via Tangany we see the same thing happening in the tokenization field, where we are asked by institutions if I tokenize securities or other assets, what are the benefits? Do I save costs? And that is what we see starting this year. Actually, we have a couple of partner banks who are going to start to tokenize assets with their own. They just have one goal there, not because the technology is fancy or they want to do anything differently, just to really save costs there. And we see the first business cases where tokenization is cheaper than issuing securities the traditional way. And the same goes for stablecoins in the end. Like Luis, you already highlighted it. It's also a cost saving here, besides, of course, the 24/7 availability and other benefits as well. Another question is, from your experience, what makes institutions trust a stablecoin setup long-term? I will take that one maybe. So from what we have seen in the last couple of years as Tangany as being regulated now for 5 years here in Germany and European-wide now since last year, it's really about regulation and having security on the institution side, that their compliance teams, their risk teams, their outsourcing team, and all the others have a good feeling and confidence that a setup is based on regulation and is following how the regulators and authorities are anticipating how a setup should look like. And if there's regulation in place, it's more like a blueprint or playbook how stablecoins and digital assets can be used. And that is now here with MiCAR EU-wide. A bank in France does exactly know how a bank in Italy or in Germany is adapting stablecoins and other assets on blockchain, and they're speaking now the same language. And also we as innovators, your AllUnity's Tangany are speaking also the same language. It's based on Doro, it's based on MiCAR, and that is really what I personally believe is key for institutions to trust stablecoin setups. And now we have the ingredients here, and everything is ready to be cooked here. So maybe one more last closing question. Looking ahead, what would success for a European stablecoin ecosystem actually look like? So maybe heading back to you, Luis, how does a successful ecosystem for stablecoins in Europe look like in the future?
I would say it's the same as now in the existing world. So we just have to set up a flow. So we have the blockchain, which is more or less the settlement layer. And on the top of that, we have to connect the more or less the same players. So you can only send or pay an invoice when your counterparty is also on the blockchain, so has a wallet. So we need a wallet infrastructure that is either provided by custodians like Tangany or in the future also by the banks. And then you have to have the availability to on and off ramp, so getting into a stablecoin and out of the stablecoin, which is also the bank. So again, as mentioned also in the beginning, stablecoins are not to fight against banks. It's rather to really improve the financial ecosystem so that you can have the cash leg and the asset leg on chain. So really solving the delivery versus payment problem. And more or less you need the same players, but you need less players. So for clearing purposes, you don't need any big clearers to move funds between the US and Europe. It's just on chain. So it's the receiver and the sender bank or custodian. And that's it, more or less. And then connecting it to the old world, or not old world, but the treasury and ERP system. And this is, I would say, the anchor for corporates, especially that they can have the same accounting setup and logic as they have currently, because this is like how also the regulator or the auditor wants to have it. But this is like already more or less in place.
Perfect. I think that was a great key message for the ending. And so thank you everyone for being with us here today.